is stronger than his.
Election season is in full swing, but for Reshma Patel, working in politics wasn't always on the cards. She had worked on Wall Street, first at Bear Stearns, and then she took a job at Lehman Brothers in February 2008. A few weeks later, Bear Stearns went under. Then, in September, Lehman suffered a similar fate.
That weekend, it was a Sunday, I was actually at a friend's daughter's birthday party, and there were people who were there at the party who are at hedge funds, and they're like, oh, you know, we're all trading against Lehman, so it's gonna go under tomorrow, right? And my boss also, you know, and I were actually going into the office anyway to do work, and I talked to her, and so we were like, you know what, let's just clean out our offices.
After Lehman went bankrupt, Reshma got a job at Barclays before eventually leaving the industry. She says the financial crisis gave her fresh perspective.
Power is held in the hands of a few, right? So because not everyone has a financial literacy, some people are able to take advantage of them, make a lot of money, and then control the political power.
But the fall of Lehman had a big impact on the financially literate too. After Lehman Brothers folded, the stock market suffered its worst losses since the terror attacks on 9/11. Some saw their life savings wiped out, and close to 10 million Americans lost their homes. Delmonico's is located just a few blocks away from the New York Stock Exchange. Its managers say its dining options had to change after the fall of Lehman's.
We created a much less expensive dining alternative for them. So we introduced a new grill menu in our bar area as well as the adjoining lounge, and people were able to still dine with us but at a much lower price point.
After a lean few years, those here say business is now booming. The US economy just logged its best quarter of economic growth in 4 years. But some economists and analysts believe large chunks of the population aren't getting a taste of this growth.
For the most part, the history of the last 10 years since this crisis has been the replacing of high wage, higher wage, high hour jobs by low wage, low hour jobs.
The US is currently in the longest bull market in its history. President Donald Trump says the economy has never been stronger, but economists fear the lessons from 2008 have yet to be learned. William Denselow, TRT World, New York.
So what have we learned since 2008? To help us answer that, I'm joined by our guests. In New York is Harold James. He's a professor of history at Princeton University, specialising in economics. And joining us from Paris is TRT World's editor-at-large, Craig Copetas. Welcome to you both, gentlemen. Harold, I'd like to start with you, if I may. Going back to 2008, a day after Lehman collapsed, you wrote an editorial, an op-ed piece in the Financial Times, and allow me to quote a little bit of that back to you, if I may. You said, today there are real risks, on the one hand, of inadequate action, and on the other, of actions that have damaging long-term side effects. Weighing those risks is a judgment call on which history does not provide any firm lessons. Of course, since then, we've had $4.5 trillion worth of quantitative easing. We've had interest rates slashed to zero. With the benefit of hindsight, do you think the Fed and the government got that balance that you spoke about right?
I think the Fed did get the balance right. It really learned the lessons of the Great Depression. The chair at the time, Ben Bernanke, is a great student of the Great Depression. But I think it's also clear that the measures used, the quantitative easing, the low interest rate policy, have distinct side effects, and we're living with those side effects. So it's really like treating a serious illness. Any medication that you give with a serious illness has its side effects, and the side effect of the quantitative easing has been a tremendous asset boom throughout the world, and the emergence of new kinds of potential bubbles, and they pose in the future, I think, a threat.
So at that time, were there any other alternatives?
I think people will debate for a long time whether it was right to let Lehman collapse, because, you pointed out in the introductory segment, it was a large bank, the fourth largest bank, but it wasn't that large. It wasn't absolutely essential to the US economy in the way that, say, in many of the European countries, they have large banks that are bigger than even the GDP of the country. But the consequence of letting it slide was that there was then the problem with AIG, and that was the really serious problem that just sparked a financial meltdown that I think hadn't been properly anticipated before, because before people saw it in terms of the subprime crisis, afterwards they saw it in terms of the large-scale financial meltdown.
Over the last week, I've heard this said a few times, history doesn't repeat, it rhymes. What are the, where do you see the next big crisis coming from?
Well, the most obvious threat, and it's one that people are very conscious of, is the way in which the rest of the world will react to the exit from the extraordinary monetary measures in the United States and the normalization of US monetary policy. As you pointed out, we're in a boom phase at the moment. There are labor market pressures. We expect interest rate rises, but that's going to affect many corporations throughout the world, many emerging markets that have borrowed in dollars, and their borrowing costs are going to rise, and we have the potential there for a different sort of crisis, really a return to something like the 1990s.
And we are seeing some of that manifesting itself in the emerging markets as we speak almost. Craig, I'd like to turn to you, if I may. You've written extensively about all of this. What are your recollections of that time?
Well, my first recollection is the financial meltdown was forecast. It had been forecast for 4 years prior to 2008, every year at the World Economic Forum in Davos, Switzerland. I know, I was there, I wrote those stories. The financial Solons of the world didn't listen. 1 week before Lehman went under, we had a notion at Bloomberg that this was going to happen. And I was dispatched to a yacht called the Caldera, which is named after the volcanic eruption that Plato said sunk Atlantis in the Aegean Sea. I was on board with a number of bankers, including a managing director of Lehman by the name of Nicholas Lazarus. Actually, he had left the company a few months prior. When during this entire week, Lazarus and the bankers who were shuttling back and forth from this boat, as a witness to history, I can tell you, he made over 100 phone calls, some of them as long as 4 or 5 hours. There were hundreds and hundreds of texts and BlackBerry messages. Bankers were being shuttled back and forth. And what I saw happening there was, and chronicled in this story, was a brutal unveiling of the avarice and woe by powerful people who lied about creating value in order to destroy it and enrich themselves. And I will give you one of the quotes from that boat. This is from Nicholas Lazarus. This is happening while Lehman is posting $3.9 billion third quarter loss on a $5.6 billion write-down. This is his quote: "Greed trumped everything at Lehman and on Wall Street. They are willing to make a loan to an orangutan."
Right. That is absolutely fascinating.